Hi traders, welcome to another episode on the trades we missed last week. So moving on Monday we had a bullish trade. That was on the 22nd of September. And this bullish trade, as you can see, this is coming from a 3-minute time frame. And you can see to my left here is a fair value gap. And this fair value gap is being highlighted here. We actually waited for price to come back to hit this fair value gap, then give us a break of market structure and an entry. So you can see this is the first trade here, fair value gap at first on Monday. Then you can see tap into that fair value gap. Now we also have a break of market structure here. As you can see, we have series of break of market structure here. The market did not break structure at this spot, so we can't count that as our entry. Here we can see a fair value gap. Did market break structure? Yes, market actually broke this previous high here. So after breaking this high with this week, you can see that there's a fair value gap at this spot here. See this fair value gap here. So this whole candle should be our entry because of this fair value gap, and our stop loss would be at this previous low this week right here. So this is it. Just highlight it like this. So you can see how the market actually came back to tap. The price comes back to tap this fair value gap here. So this is giving us a bullish trade and our reason for entry right here. So this is how we put our long position at this spot here. Our stop loss right here, like so, and our entry at this fair value gap. Then our take profits should be at this previous high here. You can see this previous high. This is where we put our take profit, and this is giving us a 1.23 risk to reward ratio. And you can see how price goes all the way to give us more than 4.03 risk to reward ratio. On our left, you can use this as our take profit right here. This can give us our reason for taking our profits here. This is going all the way to give us 5.05 risk to reward ratio. And next is our second trade, which, as you can see, price is coming from this fair value gap right here. Let's push this to the right side to see it clearly. So we have a fair value gap here, and price comes back to tap this fair value gap here. And moving on, you can see that it's already created our break of market structure. And prior to that, we have a newly formed fair value gap at this spot here, like so. We have it here, and that shows our reason for entry. That's the last confluence for our entry. So this is how it goes. As price comes back to tap this fair value gap right here, boom, we just enter the trade for our long position here. Our stop loss would be on our previous low that created for us that fair value gap. Our entry at that fair value gap. Then our take profit should be at the previous high right here, giving us a 2.54 risk to reward ratio here, as you can see. So the next is trade number 3. As you can see, our trade number 3 is also coming from a fair value gap here. As usual, price comes to tap it and bounces off from it to give us a break of market structure at this spot here. We have a break of market structure here. Price breaks below this previous low and gives us a newly formed fair value gap. That is our newly formed FVG for our entry. So we have our order block and our fair value gap. So at this order block, we can use this order block as our place for entry. So let's put our short position right here. And the next is our stop loss. So we have to protect our funds, our capital, and our take profit should be at that previous low, or you can also call it a swing low for a higher risk to reward ratio using the extreme low we've got here. So we have a 2.49 risk to reward ratio for our third trade. Then moving on, we have to go to our number 4 trade. So on our trade number 4, we have a fair value gap as usual. We have a tap into this fair value gap, as you can see here. This is a fair value gap, and we have this tap into it. The next one we need to look for is our break of market structure, like so. You see how price breaks above the previous high, indicating that price wants to move forward, right? So we have a newly formed fair value gap as usual after that tap into that first fair value gap. Now we have a break of market structure and a newly formed fair value gap. So this fair value gap would indicate that we can actually enter this trade. So we have a fair value gap here. Price taps into this fair value gap, and this would indicate our entry. So we have to be ready, or at that spot after using all patience we've got. So since price comes back to tap it finally, we can actually take a good chance at this trade. So we have it tap into this fair value gap, and boom, we have price come to hit our take profit, giving us a 2.47 risk to reward ratio at this spot. This is where we would actually put our TP, our previous swing high here. So the next in line is trade number 5. As you can see here, this is a bearish trade. We have a tap into this fair value gap. So, and after that tap, you can see our price push downwards to pass or give us a break of market structure, which is our break of our previous low here, indicating that price wants to move to the downside. And prior to that break of market structure, we have for ourselves a reason for entry, which is our newly formed fair value gap at this spot. So this fair value gap would indicate that we have a chance at this trade. We can actually enter this trade. You can see it here. So we can use this for our entry for our trade number 5, short position right here into this fair value gap. And our stop loss will be above this previous high at this spot here. So that's how we control our capital. Then our take profit would be at the previous low. We can use this low right here for our TP, or this one here, because price might come to take out this liquidity here, these two lows right here, and just like so, we have a 2.76 risk to reward ratio for that trade number 5. Moving on, we have a bullish trade for our trade number 6. You can see this is a fair value gap here. Price wants to fill up at this spot. You see, have a space for price to bounce back from after filling up. Then we have obviously a price comes to tap it, and break of market structure is just right here. So we have a break of this previous high. If you go down to our 1 minute time frame, you can see a break, and you can see how price closed above it. But for now, we are actually just using our 3 minute time frame. If you can see it clearly on our 3 minute time frame for this strategy, then you are good to go. So we have a break of market structure, and we have for ourselves a fair value gap right here. You see how price comes to hit a fair value gap, then the next is a break of market structure and a newly formed fair value gap for our entry. Now this is where we enter this trade. So we have a long position here, we enter this trade here. So at this spot is where we put our stop loss. This low that created for us our fair value gap, it's where we put our stop loss. Then This is where we put our take profits. You can see we have almost 2% for this trade. This is 1.93 for this first TP. Then the second TP we can use is this one. So we can use this previous swing high for this trade for our TP. Now this is giving us a 2.89 risk to reward ratio. So this is 2.89 risk to reward ratio. This bullish trade number 6 is giving us. So the next trade is trade number 7. Now this trade number 7 is right here, a bullish trade. We have a fair value gap here. Price comes to hit this fair value gap, bounces off from it, and we have a break of market structure at this spot. So we have a break of market structure here and a fair value gap at this spot here. This is a fair value gap here. Price comes to tap into this fair value gap, giving us a chance at this trade. This is how we enter this trade for our long position here into our order block. Next is a tap, and we have this for our stop loss. So right above this previous high is where we put our TP, which is our take profit, 2.29 risk to reward ratio. The next in line is our trade number 8. So as usual, first is our fair value gap here. See this fair value gap here. Price comes to tap into that fair value gap and bounces off from it to give us a break of market structure here, and we have a fair value gap at this spot here. See how price comes to tap it, giving us our bullish entry, just like so. You can use this order block here to give us a maximum risk to reward ratio, and that is giving us 2.59. No, let's use this high right here. This is high right here. So this is giving us a 2.59. Then you can use this previous high right here for a maximum risk to reward ratio. This is it here. This is giving us 5.41 risk to reward ratio for our trade number 8. So moving on, our trade number 9 happens to be a bearish trade. You can see this is a fair value gap here. During this consolidation, we have a fair value gap here, and price comes to tap into this fair value gap, bounces off from it. Then we can just wait it out for price to tap into this fair value gap and give us a bearish trade. You can see price coming to that spot, that fair value gap, to push it downwards. So at that time, we can use it to our advantage as a newly formed opportunity to enter the market. So this is our stop loss right here, and this is our entry at the fair value gap. Then our take profit should be at a previous low. We can use this low for our take profits. For this trade number 9, so this is its 3.58 risk to reward ratio would be for our trade number 9. Then our trade number 10 happens to also be a bearish trade. You can see price taps into this fair value gap here. As price taps, it comes back down, gives us a fair value gap here. That is where we'll put our entry for a short position here, and this is where we'll put our stop loss here. Let me put this to the left for you guys to see. So we have stop loss at this high. Tap into this area would give us our entry. Then we can use this for our take profits here. So prior to this one here, prior to this fair value gap here, or at the beginning of this breaker block, is where we'd put our take profit. Or you can as well use this previous high for a risk-free trade. So using this low here for a risk-free trade, this is giving us a 3.0 risk to reward ratio. And the next on our list is our trade number 11 for the week. This happened to be on Wednesday. So we have a tap into this fair value gap here. We have a tap into this fair value gap here. You can see right like so. As price comes to tap into this fair value gap, then bounces off from it. Then we have a break of market structure at this spot here. The next is fair value gap for our entry. Now we have our fair value gap here, this one here. Then we'll enter this trade, putting our stop loss here, entry at this spot, and our take profits should be at a previous low right here. You can use this. This is a fair value gap here. This would be a reason for your take profits here. Let me take this one out. You can also use that low, this low right here, for your take profits. But before then, you can use this for a risk-free trade here. Like so, giving us a risk to reward of 2.65 for your bearish trade on Wednesday. So that was our trade number 11. So moving on, our last but not the least trade is our trade number 12, and this was on Thursday. So we have a fair value gap here. This is a fair value gap here. You can see, like so, we have a fair value gap here. Then price comes to tap into this fair value gap, bounces off from it, and we have to ourselves a break of market structure. Now we have a break of market structure here, and price comes back to tap into that fair value gap and order block, and you can put our short position at that spot here. You can use this one, this whole fair value gap for our entry, or use just this order block to actually wait for your trade to tap into it. So this is quite high for our risk to reward, but it's worth it, because when price hits this order block, then it can actually give you a higher risk to reward ratio compared to the fact that you want to put it here. This won't give you a much higher risk to reward ratio. So this is okay using the order block here. So would use this and this one for your stop loss. This is your stop loss right here, and you use this for your take profits. So we have our take profits here at this previous low, and this high for our stop loss, giving us a 3.93 risk to reward ratio, almost 4 points. And you can see how the market rallied all the way down. You can see where the market is or has been all the way down. This is more than 20 points risk to reward ratio. So let's just leave it at that. You can use this previous low here also for a higher risk to reward ratio, giving us a 5.19 risk to reward ratio. So guys, let's go back to our chart and backtest, analyze GBPUSD and see what the next week has in store for us. So moving on, we'll see you guys on our next episode on the trades we missed last week, and we'll analyze again together. Peace.